I am DharaniPriya from Department of Commerce. Now I am going to discuss the topic about Introduction of Accounting. Definition of accounting. According to the American Institute of Certified Public Accountants, that is AICPA, accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money transactions and events which are of a financial character and interpreting the results thereof. அக்கார்டிங் ஏஐசிபிஏ அப்படிங்கிற அக்கௌண்டிங்கை என்னன்னு டிஃபைன் பண்ணியிருக்காங்க அப்படின்னா அக்கௌண்ட் இஸ் ஆர்ட் ஆஃப் recording we record day-to-day transactions. If in a particular day we are purchasing a product, we are selling a product for cash, and if we are purchasing a product for credit or selling a product for credit, the transactions must be recorded. It is a recording. Classifying, we classify all these transactions and we divide it into journal, ledger and trial balance. And summarizing, it is a financial statement and only the monetary transactions are recorded in accounting. Only monetary transactions takes place in accounting. Next, golden rules of accounting. Golden rules of accounting is the basic accounting rules that is to be followed for posting the entries. There are three types of accounts: personal account, real account and nominal account. The debit side and credit side. These accounts should be debit and credited. The process of debiting and crediting is the personal account. Personal account deals with an individual, a firm or a company, whereas real account deals with tangible and intangible assets. Tangible asset which can be felt or seen, whereas intangible asset cannot be seen or felt, that is a goodwill. For intangible asset, the example is goodwill. Nominal account, all expenses and losses and incomes and gains are shown in nominal account. The golden rules of accounting, the types of account: personal account, real account and nominal account. Personal account, debit the receiver. What you are receiving will be debited, whereas credit the giver. What you give to someone is credited. Real account, what comes into the business is debited. What if you are purchasing a product, the particular product should be debited. What goes out of the business will be credited. This cash go, for example, if you are purchasing a product for cash, the cash goes out of the business, so the cash should be credited. Nominal account, expenses and losses of the business is debited. All நம்ம பிஸ்னஸில் பண்ணுற செலவு ப்ளஸ் நஷ்டம் எல்லாமே டெபிட் பண்ணுவோம். வேரஸ் இன்கம்ஸ் அண்ட் கெயின்ஸ் ஆஃப் த பிஸ்னஸ் ஷுட் பி கிரெடிட்டட். வருமானம் ப்ளஸ் ப்ராஃபிட் இந்த ரெண்டும் கிரெடிட் பண்ணுவோம். வேரஸ் கோல்டன் ரூல்ஸ் ஆஃப் அக்கௌண்டிங்: personal account, debit the receiver, credit the giver. Real account, what comes into the business is debited, what goes out of the business is credited. Whereas nominal account, expenses and losses of business is debited, incomes and gains of the business is credited. Journal, the word journal is derived from the Latin word journ, which means a day. Journal means a day book wherein day-to-day business transactions are recorded in a chronological order. The process of recording transaction in the journal is called journalization. The entries made in the book are called journal entries. The word journal is derived from the Latin word journ. ஜேர்னலுங்கிறது வந்து ஜேர்னுங்கிற லாட்டின் வேர்டில் இருந்தால் டிரைவ் ஆகிருக்கு. அப்போ ஜேர்ன் அப்படின்னா என்னென்னா டே. ஜேர்ன் மீன்ஸ் டே. ஜேர்னல் மீன்ஸ் அ டே புக். ஜேர்னல் அப்படிங்கிறது ஒரு நாளோட புக் வேர் டே டு டே பிஸ்னஸ் டிரான்சாக்ஷன்ஸ் ஆர் ரெக்கார்டட் is properly. Day-to-day transaction journal is a recording of day-to-day transactions properly. The process of recording a transaction is called journal. For example, if you are purchasing in a particular day, if you are purchasing a product for cash, if you are selling a product for cash, and if you are purchasing a product for credit, these three transactions should be recorded in journal. That recording process is called journalization. The recording process should be converted into journal entries. That entry is called journal entry. For example, if you're purchasing furniture for rupees 10,000, it is for cash. So what comes into the business? Furniture. So furniture account or purchase account data to you are purchasing for cash. So purchase or furniture account data to cash account. Sold furniture for rupees 2,000. You are selling a product for cash. So what comes into the business? Cash comes into the business, and what goes out of the business? Sales goes out of the business. So cash account data to sales or furniture account. If you are purchasing furniture for credit from A, purchase account, what comes in? Purchase comes in, whereas what goes out? The concerned creditor means கடனாளி கடன் கொடுக்குறவங்கள நம்ம credit பண்ணுவோம். So purchase account data to A account. If you are selling furniture to X for credit, so X account data, concerned authority, concerned person account data to sales account. Ledger. It is defined as a summary statement of all the transactions relating to a person, asset, expense or income which have taken place during a given period of time and shows their net effect. Ledger. It is a summary of all transactions relating to assets, expenses or income that கொடுத்துருக்க பீரியட். இப்போ we are posting journal. The journal will be posting to ledger. For example, the format of ledger: debit, date, particulars, journal folio, amount. At the credit side, date, particulars, journal folio, amount. For example, these journal entries should be posted to ledger. For example, cash ledger account. If you are putting cash ledger account, what will be the format? Means by purchase account will be credited, whereas sales account will be credited. By purchase 10,000 will be credited, whereas to sales 2,000 will be debited. The remaining amount will be the balance carried out. Next, for example, if you are putting purchase ledger account, to cash will be debited, by balance carried on will be credited. If nothing, only one entry is made, that other side will be balance carried down. Next is subsidiary books. Subsidiary books are subdivision of journal. Each book is different due to the nature of transactions recorded into them. For example, credit sales are recorded in one book. All the cash transactions are recorded in another book. Subsidiary books. It is a subdivision of journal. If, for example, we will be seeing purchase ledger accounts, cash ledger, sales ledger. These are the different types of journals. Each book is different due to the nature of transactions recorded in it. ஒவ்வொரு புக்கும் தனித்தனியாக பார்க்குறப்போ அவங்க பண்ண டிரான்சாக்ஷன்ஸ், ரெக்கார்ட் பண்ணியிருக்க டிரான்சாக்ஷன்ஸ் எல்லாமே ஒன்று டிஃபர் ஆகி தான் இருக்கும். ஃபார் எக்ஸாம்பிள், கேஷ் டிரான்சாக்ஷன்ஸ் எல்லாம் கேஷ் புக்லேயோ, கிரெடிட் டிரான்சாக்ஷன்ஸ் எல்லாம் வேறு புக்லேயோ வரும். ஃபார் எக்ஸாம்பிள், இஃப் யூ ஆர் பர்ச்சேசிங் அ ப்ராடக்ட் ஃபார் கேஷ், it will comes under cash account. If you are selling a product for credit, it will comes under sales account. If you are purchasing a product for credit, it will come under purchase account. Like this, their subsidiary books are divided into different types, and each book is different from one book. Types of subsidiary books. There are 5 types of subsidiary books: purchase book, sales book, cash book, purchase return book and sales return book. Purchase book. All the credit purchase will be recorded in purchase book. Only the credit purchases will be recorded in purchase book. Not cash transaction, cash purchase. Only the credit purchase will be recorded in purchase book. Whereas sales book, only credit sales will be recorded. In purchase book only the credit purchase will be recorded, whereas in the cash sales book only the credit sales will be recorded. Cash book, all the cash purchases and cash sales will be recorded. All cash transactions, monetary transactions will be recorded in the cash book. Purchase return book, it is the book where the suppliers returns the products returns to suppliers. If you are selling a product, the products come back to you, that is the purchase book. Whereas sales return book returns from customer. You have sold it product to a customer, the customer returns it to you. Purchase return book, suppliers, if I am purchasing a product, I return it to the supplier. This is purchase return book. Whereas sales return book, if you are selling a product, the customer returns back to you, that is sales return book. Purchase book, only the credit purchases will be recorded, whereas sales book, only the credit sales will be recorded, whereas cash book, all the cash transactions, cash purchase, cash sales and the monetary transactions will be recorded. Purchase return book, it is a book where the goods are returned to the suppliers, whereas sales return book, it is the book where the returns goods are customers return the goods to suppliers. Cash book, it is the primary entry where all transactions are recorded, where all cash transactions are recorded. Primary entry of accounting is cash book. Only the cash transactions are recorded in the cash book. Types of cash book: single column cash book, double column cash book and triple column cash book. Single column, it is combined with personal account and real account. Personal is an individual, firm or a company. Real account, asset and intangible asset and tangible assets. So single column cash book deals only with cash transactions, whereas double column cash book deals with cash and bank column, or otherwise it will deals with cash and discount allowed column, or bank and discount allowed column. Double column cash book deals with three different types of columns, that is either it will be cash and bank column, or it will be cash and discount allowed column, or it will be bank and discount allowed column. Whereas triple column cash book deals with cash, bank and discount allowed column in both debit and credit side. Types of cash book, there will be three types of cash book, that is single column, double column, triple column. These three cash books, that is which will be shown only on both debit and credit side. Single column cash book deals only with cash. Double column cash book deals with bank or cash, bank and cash, or bank and discount allowed, or cash and discount allowed columns. Whereas triple column cash book deals with all the three, bank, cash and discount allowed columns. Petty, next one, petty cash book. The word petty is derived from the French word petit, which means small. It is a formal summarization of petty cash expenditures sorted by date. The word petty is derived from the French word petit, which means small. All the small expenses are recorded in petty cash book. It is sorted by date. If the financial year starts from April 1st to March 31, we will not be purchasing the small petty cash through the year. It will be petty means small. அப்போ petty cash book அப்படிங்கிறது சில்லறை செலவுகள். For example, postage, telegram, stamp, stationery, these are the சில்லறை செலவுகள். இதெல்லாம் தான் சில்லறை செலவுகள். ஒரு வருஷத்துக்கு for the whole year we will be not purchasing the products. We will be purchasing only for few periods. So petty cash book is a small expenses sorted by date. If you are purchasing product on 30th April 2021, that for rupees 500 it will be listed in petty cash book. After that we are purchasing only on July 15th. So April 30th, July 15th, we will be making transactions only for a particular period of time, not for a whole year. We will be making when we are required. Trial balance. William Pickles. According to William Pickles, the statement prepared with the help of ledger balance at the end of financial year to find out whether debit total agrees with credit total is called trial balance. வில்லியம் பிக்கல்ஸ் அப்படிங்கிறவங்க ட்ரையல் பேலன்ஸ் என்ன டிஃபைன் பண்ணியிருக்காங்க அப்படின்னா இட் இஸ் ப்ரிப்பேர்ட் த ஸ்டேட்மெண்ட் ப்ரிப்பேர்ட் வித் த ஹெல்ப் ஆஃப் லெஜர் வித் த ஹெல்ப் ஆஃப் லெஜர் வச்சு லெஜரோட ஹெல்ப் மூலிமா நம்ம அட் த எண்ட் ஆஃப் ஃபினான்ஷியல் இயர் டெபிட் டோட்டலும் கிரெடிட் டோட்டலும் அக்ரி ஆகுதா அப்படிங்கிறத வந்து கண்டுபிடிக்கிறதா வந்து ட்ரையல் பேலன்ஸ். த ஸ்டேட்மெண்ட் ப்ரிப்பேர்ட் வித் த ஹெல்ப் ஆஃப் லெஜர் at the end of financial year to find out debit total agrees credit total is called trial balance. Trading account. Trading account is a nominal account and is a part of profit and loss account. It includes all direct expenses and income incurred in the business. It is generally prepared to find a gross profit or gross loss of the business during the financial year. Trading account is a nominal. Trading account is a nominal account. Nominal account means all expenses and income. Income and expenses. Nominal account deals with income and expenses, and it is a part of profit and loss account. So, the trading account deals with all direct income and direct expenses. Direct income, for example, direct income, carriage outward, sales. These are the direct income. For example, direct expenses. Wages, opening stock, purchase. These are the direct expenses which we directly pay to the concerned authority. So the trading account is prepared to find out gross profit or gross loss during the financial from April 1st to March 31. We will be finding out gross profit or gross loss of the business. The deductions. Gross means the gross value refers to the without making any deduction. எந்த ஒரு டிடக்ஷனும் பண்ணாமல் டைரக்ட் இன்கம் டைரக்ட் எக்ஸ்பென்சஸ் மட்டும் வச்சு போடுறது gross profit or gross loss. Next, profit and loss account. Profit and loss account is prepared to find out the net profit or net loss of the business for a particular accounting period. It is calculated by comparing the gross profit or gross loss with the indirect expenses and income. Profit and loss account is prepared to find out net profit or net loss கண்டுபிடிக்கிறது தான் வந்து profit and loss account during a particular period of time, that is April 1st to March 31st. It is calculated by comparing. Profit and loss account எப்படி கண்டுபிடிக்கணும் அப்படின்னா gross profit or gross loss வச்சு அது கூட indirect expenses and indirect income கம்பேர் பண்ணி வரதான் வந்து நமக்கு net profit or net loss. Net value அப்படின்னா பண்ண டிடக்ஷன்ஸ் எல்லாம் போகிறது, டிடக்ஷன்ஸ் பண்ணி நமக்கு ஒரு வேல்யூ வருதுன்னா அதுதான் வந்து நெட் வேல்யூ. ஸோ இன்டைரக்ட் எக்ஸ்பென்சஸ், சேலரிஸ், அட்வர்டைஸ்மெண்ட், depreciation, rent paid, commission is our indirect expenses, whereas indirect income, commission received, discount allowed are indirect income. Indirect, which we indirectly pay to the concerned authority. Gross profit, we are by comparing gross profit with indirect expenses and indirect income, we calculate profit and loss account. Balance sheet, it shows the asset and liabilities of the company. The balance sheet shows the financial position of the business at a particular time. Balance sheet shows assets and liabilities. Liabilities, it is a பொறுப்புகள். ஒரு கம்பெனியில் உள்ள liability, it is a liability for me to prepare financial position, financial statement of a company. Asset, the products that all the transactions are an asset for us, for the business. So it shows the assets and liabilities of the company. The balance sheet shows the financial position of the business at a particular time. It is prepared to view the current financial position of a business. Correct financial பேலன்ஸ் ஷீட் எதுக்காக கண்டுபிடிக்கிறோம் அப்படின்னா நம்ம பண்ணுற டிரான்சாக்ஷன்ஸ் எல்லாமே கரெக்டாக நமக்கு ஆன்சர் வந்து போத் அசட்ஸ் அண்ட் லைபிலிட்டிஸ் ஷுட் பி ஈக்குவல். திஸ் இஸ் த பேலன்ஸ் ஷீட். It is prepared at the end of every financial year. Every business prepares balance sheet. Balance sheet is the true and fair value of the business. Thank you.